All right, ladies, I think we are live. I think the technology guys are going to be in my favor today. At least I'm certainly hoping and a praying. All right, if you're there with me, drop me some hearts, send me some positive vibes. We're getting ready to talk business entity types and taxes. I know your most favorite subject on a Friday morning, but we're going to get into it. I have about 30 minutes of your time. And so um, I want to make sure that you guys are there with me. I'm going to introduce myself really quickly, and then we're going to get into it. All right, awesome. I see some hearts. Okay, so good morning, everyone. We're supposed to be having a long weekend, but of course, in these times, I will be home. So I figured now is the best time for us to talk some business and talk some taxes, and that's what I'm here for. So this is my first Facebook Live within this group. So I really do appreciate everybody for giving me their Friday morning to talk about taxes and to answer your questions. So my name is Taliba Bales. I am the founder and CEO of TMB Tax and Financial Services. My office is located in Birmingham, Alabama. But of course, we have clients throughout the US. If you have to file taxes, you're our client. And so I work with small business owners, not only on individual and small business tax compliance, but we also do bookkeeping and payroll. We also do tax planning. We talk about business credit and financing coaching. And so I have really been working in my passion to help small businesses just really establish a financial strategy for success. And when you're approaching your business in developing that financial strategy, there's a number of different pieces. And so today, I'm going to be talking about the piece of tax compliance. I'm also going to be going live within the group next Friday around the same time. And that topic is going to be, are you running a business or a hobby? And we're going to also be talking about taxes and a little bit of bookkeeping next Friday. But I'm going to go ahead and share my screen, and we're going to get started on today's topic, which is your business entity type and taxes. Okay, so bear with me. I'm going to go ahead and share my screen, and let's make sure that the technology guards are still going to be in my favor. I'm going to just peek down at my phone just to make sure that you guys are seeing what I'm seeing. Perfect. Okay, you guys are seeing what I'm saying. All right, so let's dive right into it because, like I said, I just have 30 minutes. So we're going to be talking about business entity types. And so what I mean by that is, are you a sole proprietor? Are you a single member LLC? Are you a C Corp? And we're going to talk about choosing that right legal entity today. So here are some considerations that should be in play when you are selecting your business entity type, or even if you're considering changing your existing entity type. I did a poll within the group last week, and about 300 of you guys responded. So I'm super excited about that interaction. And the most popular business entity type within our group today was LLCs, where we had quite a bit of sole proprietors. There were quite a bit of questions surrounding the topic, so we're going to talk about that as well. But some of the main general considerations that I want you guys to consider are these four things, and that is your separation of personal assets from your business. Okay, when you're considering whether or not to form a business entity, you want to consider the importance of separating your personal assets from your business. You also want to consider tax implications. Okay, you want to consider the complexity versus the liability protection that you would get from a business entity. And then you also want to consider the profit distribution and the profit and loss. So that is also all we're going to talk about in these minutes. Okay, so let me keep going. Now, let's talk about the pros and cons of some of our popular business entities. So we're going to talk about sole proprietorships. We got the man standing here. He's trying to decide, what do I want to be? Am I going to just be a sole proprietor and use my social for everything? Am I going to be a limited liability company? Should I ask the IRS for S corporation status, or should I be a C corp? All right, so let's talk about sole proprietors, because there are quite a few of us that selected sole proprietors in our poll. So some of the advantages: it's easy, it's simple to form, right? Depending on where you are in your state, you may be required to at least register as a DBA. If you want to use any name for your business other than your own business. But you don't really need to do a DBA in most cases. Most of the clients that I've found over these past 13 years have really just used their name on a Schedule C and their social. So simple to form, simple to maintain. You don't really have any financial statements. There's not any lengthy paperwork to stay compliant. Pretty much you're filing your Schedule C when it's tax time, along with your other household income. And so it's simple to tax. The income that you're going to be earning as a sole proprietor is your income. And so, like I said, you're going to be filing a Schedule C to be tax compliant if you are a sole proprietor. Now let's get into some disadvantages of being a sole proprietor. So originally I talked about that whole consideration of whether or not you want to separate your personal and your business assets. And this is actually one of the cons of choosing to remain a sole proprietor. Okay. Sole proprietors are personally liable for any debts of the business. And it's a high risk of your personal assets in the case of a lawsuit. So let's do an example. You're operating within your business, and someone doesn't like your product, or your product explodes on someone and causes some type of damage to their body, or damage to their house, or damage to something. If you're a sole proprietor, who are they going to sue? Are they going to sue your business, or you're your business? It's not separated. So then your personal assets are actually in play when you're a sole proprietor. You do not have any legal protection should something happen when it comes to being a sole proprietor. You're using your personal information, right? So you're using, if you're a home-based business, you're using your home address on stuff. You're using your social on some things. Maybe when you're signing contracts, again, it's all in your personal name. You really are not separating yourself from your business as a sole proprietor. And then you don't have any business credit because it's you. This is all in your social. You have not separated your finances from your business's finances. So everything is in your social. And of course, if life happens, like life is happening to us right now with this global pandemic, and maybe there's a loss of income in your home, or perhaps get behind on your bills, or anything where your personal credit may take a hit, then that's also going to affect your ability to operate within your business. So those are just some of the cons of being a sole proprietor. Okay. Now let's talk about an LLC. All right. Because I got a limited time and I want to make sure that I cover everybody. So what are the advantages of being an LLC? And with the LLC, the most common type of this is a single member LLC. So it can just be you, and you are the sole member of your LLC. Okay. Now, these are also easy to form and easy to manage. It's less formation paperwork, less ongoing compliance requirements. You don't really have to create a board of directors. You don't really have to do any annual reports or anything like that. But the also benefit, and this builds on our conversation on sole proprietors, is you get asset protection. So in that same example that I used, as far as say your product causing some bodily harm to a client or something of that nature, and they want to sue, you are separated from your business now because you formed that LLC. They could sue your business, right? But as long as you don't have your personal assets tied up in your business, like your home or your car or something of that nature, then they can sue your business, but you yourself, your personal assets are protected. Then there is tax flexibility, right? I'm the tax lady. So, of course, I got to talk about taxes also when it comes to LLCs. So, for sole proprietors, remember I said, that you'll be filing your business income and expenses via a Schedule C. Well, if you are an LLC, there's a number of things you can do. You can ask the IRS to be treated as a corporation. You can ask the IRS to be treated right here. It says as an S corporation. It's still a pass-through entity, but from a tax savings perspective, I've been working with a lot of clients that have made some money that would be best treated in the S corporation status. And I'm going to talk about that a little bit if we have some time. And then the professional credibility, right? So a lot of us are doing home-based businesses because, I mean, why not, right? So when you are an LLC and even a single member LLC, that can even be your name. It could be Taliba Bells LLC, right? But you have a professional credibility. And it just it again, to me, the separation of assets, the tax flexibility, all of that stuff, easy to form, just is some powerful pros that you should consider when it comes to being an LLC. So let's talk about some cons. Now, particularly if it's more than just you, right? So if you have a partner, or if you have someone else that helps you make the decisions, and you have elected to just be an LLC, there could be some confusion over the roles, like who makes the final decisions, who's authorized to do that. And then also from a tax perspective, remember I talked about whether or not you wanted to ask the IRS for corporation tax treatment. Well, if you don't do that, there's this thing called self-employment tax. And over the years, a lot of small business owners have gotten so frustrated because they're like, look, why do I owe? Like, should I be in business? I have this Schedule C, I made this money and this, that, and I owe. And so typically the first place I look is to see how much self-employment tax they were having to pay. And so it's very few types of businesses qualify for the waiver of self-employment. You're 9 times out of 10 gonna have to pay self-employment tax if you are an LLC that has not elected to be treated as a corporation. Okay, so that's one of the cons. And then there's a challenge to grow. So if you look at it from the perspective of investors, right, and whether or not you how you want to attract those investors, like if you're issuing stock, then if you're just a LLC versus a corporation, then that would be somewhat of a liability, not a major one, but it is some level of a con that has been, experienced by some business owners in that structure. All right, so S corporations. Now, I want to start this with saying that an S corporation is an election that you get from the IRS. It is not a legal entity that you form at your state, which means wherever your state is, you're going to either choose, LLC, right, or a corporation, or again, choose to be a sole proprietor. But when I say S corp, that means that you have actually requested from the IRS to be treated as an S corporation. All right. So why do people do that? The pro to doing that is tax savings, and the most recent tax laws have certainly benefited corporations. And so if you elect to be treated as a corporation, then there are tax savings, and we'll talk about that. S corporations are also attractive to business owners right now who are transitioning into that should I pay myself conversation. And that's a popular question that I get. Is like, hey, how do I pay myself? Should I pay myself? I want to put myself on payroll. Those are some of the things that I've been talking to clients about when it comes to your business entity type, and whether or not an S corp election is what you should do at this time. And you still get the asset protection because you're still an LLC. Okay. So those are the pros. All right. So some cons. Now, if you have asked the IRS for that S corp treatment in the previous entity, like I said, the LLC, you may have some limitation as it relates to attracting investors again. Not as much as if you were just an LLC, because you can have up to 100 shareholders as an S corp. But if you want more investors, you want over 100 shareholders, then S corp would not be the best for you. There is some complexity to it, and I tell you, I've been doing a lot of different conversions, requesting that S corp election from the IRS. It's a tedious process. It definitely is. But however, it's worth it. But I have to put that out there as a con. Is something you can do yourself, but you absolutely want to be working with an expert when it comes to you trying to get an S corp election approval from the IRS, and just what that may mean for you. All right. Now let's talk about C corps. Looking halfway decent on the time, so I'm going to keep on rolling through. And I see your comments. I'm going to try to get them at the end, but we have to be respectful of the time allotted. All right, so it's for the C corps. Some of the pros, you still get that asset protection. If my sole proprietor is watching me, don't get anything from what I'm saying today. I want you really to consider protecting your assets, right? Protecting yourself, separating your personal from your business, right? And so that's why asset protection is on each one of my slides, so you still get that asset protection, of course, as a C corporation. Growth potential. So I talked about it from the aspect of investors. As an LLC, you can't really issue stock unless you are being treated as a corporation. We said that as an S corp, but even as an S corp, you can only issue stock to 100 shareholders. Well, as a C corp, a regular corporation, there is more potential to issue more stock. You can have different classes of stock and totally an unlimited number of shareholders. And so that would be people that could invest in your business. And longevity. So unlike sole proprietorships and in some cases LLCs, the C corps, they exist past the span of the owners, right? And we can think of a lot of huge successful corporations who were started, by the founder. The founder may not even be involved in the business anymore, but that business is still going on. All right, so some cons. The cost and complexity. This is up there still with the S corps. This is not something that you want to dive into without consulting an attorney and a tax professional, right? Because it's complex. But usually my clients that have done that are clients that just know immediately that they want to attract investors. You can be developing an app, right? And you know that you want to attract investors, or whatever, any type of business that you have that your sole purpose is to attract investors from the beginning, then that's something that you want to make sure you're considering in choosing your business entity type. Now, there is a con to regular corps, C corps, and that is double taxation. I could probably do a whole another 30 minutes on that. But if you've ever heard of double taxation, this occurs with C corps, right? Okay. So I put together this chart here to try to summarize what I just said, which is if you look at your formation, if you look at whether or not you have some protection, if you can transfer your business to your family, to your kids, how long your business can survive past you. This chart captures that. And afterwards, I'm going to give you a link to click on if you want a copy of this presentation. I totally can do that because I know that I'm kind of rushing through, but we want to make sure that we stay within our time. So if you would like a copy of this presentation, and I'm also doing free consults, then I'm going to be giving y'all a link underneath this post, and we can do that. Okay. So there's a couple of reasons why people are transitioning to S corporations and transitioning to regular corporation C corps, and that is the most recent tax law. The most recent tax law has totally benefited businesses. So S corporations get a 20% tax reduction, and so that is a benefit. So if you're a sole proprietor, and you've made some money on top of, you may have a husband, you may have a full-time job, right? You have other household income. Your tax rate could be 34% or higher, right? But if you have chosen to be treated as a corporation, or S corporation specifically, what I'm talking about here is that you can keep your business income separate, which does lower your tax bracket. All right. For the C corps, one of the major benefits of the most recent tax law is the reduction of their tax rates as well. And so basically, if you're a corporation, you get a flat rate tax. Now, I like to bring this up because a lot of folks are like, oh, well, the tax laws favor, the really rich, like the huge corporations, and for the most part, that's true, but it's not always like, oh, you're losing out. And I say that because you see here that middle bullet, for corporations, the flat tax rate is what? 21%. So if your business earned $10,000, your flat rate is 21%. If your business earned $10 million, your flat rate is 21%. So that's where a lot of people get, the big companies remain rich, and they're not paying into the pot as much as they should be. And that is true. However, if we just translate and break everything down that I talked about today, even us, like our thousands or our hundreds of thousands or whatever, we'll get there. But right now, there is a tax benefit for you. That flat rate still applies to your dollars, your coins, right? So don't count yourself out on that, and don't buy into the hype, right? That there are not any tax advantages that you can experience right now where your business is. So like I said, I'm coming up on a couple of minutes here, and I see I got a lot of questions in the comments. So the bottom line is, right, that you really, 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 if you're a sole proprietor, need to consider the things we talked about. Listen to this webinar again, right? I'm going to give you the link so we can do a consult, because I was going really fast. However, the overall goal that I really wanted to accomplish today, ladies, is just for us to start this conversation, right? Because it's not a lot of conversation that goes on about taxes, unless it's tax time. And I'm open year round. I have these consultations year round. I want you to start thinking about your tax compliance year round, because it is a year round piece of you developing a financial business strategy for success. You have a tool available to you. I'm a member of this group, and I am available to have that consult with you. But if you don't remember anything, don't just plop it out of your mind because it's taxes and it's difficult and it's complex, because it doesn't have to be. Okay, it does not have to be. So I have run out of time. I am all about staying on time. Oh goodness, it's Friday, but I still have a lot to do after this. But I wanted to pop in here, just so we can connect. Now, I had talked about the link. I'm gonna put it in the comments, when I go, when I get offline. And the main thing, if you don't remember anything off this slide, is that I am doing free consults for this group. 30 minutes, free 30-minute consults. Let's get together. Let's talk about where you are in your business as it relates to your business entity. Let's talk about taxes. One of the things I always say, I put it out there in the atmosphere, is if you have not done taxes in a while, you need to get caught up. That's my niche. That's fine. No judgment here. I specialize in that. I want to remove that anxiety from you. So this is the way to get in contact with me. I'm going to put my links in the comments, and I'm going to answer your questions. But ladies, I have had fun. I have run out of time. I just get 30 minutes, but I will be back. Your tax lady will be back next Friday. And next Friday, let's see what time. Okay, next Friday at 9:30 again, I will be back. And what we're going to talk about next Friday, like I said, is, are you running a business or just a hobby? Let that settle in. Are you a hobbyist or a boss? And we're going to talk about why I'm asking you that question. And if you guessed, since I do taxes and bookkeeping and payroll, we're going to be talking about it from that perspective. So I hope that you will join me tomorrow morning at 9:30 to see if you're a boss or if you're a hobbyist. All right. Thank y'all so much for joining in. And I will see y'all next Friday, and I'll get to your questions as soon as I end this live. Y'all have a happy Memorial Day weekend.